And before we continue, I'm getting notification from the other guys. Can you all make sure you can hear me clearly? Are you guys hearing me clearly?
It's been pretty good so far. We've heard you
Oh,
out for everything, at least for me.
okay, okay. All right. So on Tuesday, the guy that just responded, that's Henry. So we had him on, and he gave us a lot of insight into stocks trading. Gave us a lot of professional insights from his own experience. Like if you look in, well, I'm the only one who I've seen those stuff. So let's wait till the recording is out, and I'm sure everybody would love the content of what we have been doing for the past 2 days. Okay, but a lot of insight into stocks trading and how the futures market works, how basically you have the commodities in the first place in the market, like how are we having things like trading cows in futures and trading shares or even owning shares of companies as even, you know, like as an individual, you can own shares and just do it the way you do forex trading. So those kind of stuff, he gave us a lot of insight to how it's being done professionally, also as a hobby, because as we can see, he gave us some background insight to as him being an accountant. So he's not like saying he's a trader for the rest of his life. Not like he's trading 247. Nobody's telling anybody to do that. Okay, we'll just give you insight to something you can blend into your daily life that can be beneficial, intellectual, and also financial. It can also give you money. So now on day 3, I'll be having King FTP with King Solomon. I mixed their name up. We have so many kings now in forest trading, the identity stuff. So we're having King Solomon from King FX. I think King FX, the name of his own particular channel. Don't mind me, I know so many guys now, so I kind of like mix their names. I know them by logos. So it's a little bit weird to keep track of everybody. But at the same time, this is part of how the forex industry is. This is how our own media looks like. So we don't really have to have a personal relationship to understand the craft of what the person is doing. And that was the aspect I gave you guys into what trading is all about in terms of forex, as the symbol tells, coming from foreign exchange and all of that. So this aspect is basically the experience of being a trader. And along your way, you're going to meet individuals with different identities, maybe based on logo, maybe based on slogan, maybe based on. But at the same time, it's the craft that give you the identity. You understand? So, and this is all part of tools that could come with forex trading. All right, so let me introduce our official guest for today, as he handles today's section with psychology. And I'm also going to be uploading a file. So while he's going on, since we're live, as you're listening, you can look into the file and also gain insight to what he's trying to say.
Hi guys. So my name is King Solomon and I will be handling today's topic. Hope I'm audible though.
Yes, your audio is very clear.
All right. Thank you. So I would like to just jump right into it as we're already behind schedule. So firstly, let me just start with what psychology is in trading. So psychology is basically the study of the mind and behavior in forex trading. It refers to the mental and emotional states that influences a trader's decision making. So let me just dive right into it. Hope we have our pen and paper down to jot down some things.
And also, I'm following up with you. I think I'm I'm going to. I don't know if Joe is active. Joe is the guy that always responds with.
I don't think he's even there right now. He's always responding.
Let me say, I think Rex is here. Rex, are you free enough to follow up with the guest when he asks questions to confirm that he's audible, or anybody who would like to be in that position, so we can have a conversational class?
Can anybody be in that position? So we know your microphone you can unmute your microphone and respond to him when he's asking questions.
Can you guys hear me?
Yes, we
Yeah.
can hear you. Right?
Yeah, I think his voice is loud and clear. Though my house is a little bit busy right now, but I can hear you guys clearly.
All right.
Okay.
All right.
All right. So I'm about to mute my microphone. You can mute your when he asks a question, you just unmute and help him out. Okay.
All right, I'm good.
Okay, guys. So before we talk about our setups or stop loss or your entries and exits, let's talk about what really determine if you win or lose in this game, and that is your psychology, your mindset, your self-control. Everybody wants to catch pips. Everybody wants to find this perfect strategy. But here is the biggest truth that we all know it, but we don't want to admit to it. You are your biggest edge. You are also your biggest weakness. We all can learn. We can try our best to learn all setups or follow this guru or that guru. But if your emotions are not in control, your account would always get blown up. So it's not about your chat patterns or thereabout. It's mainly about your patience, your self-control. Now, I think I've been trading for like how many years now? 5, 6 years now. And I've seen most traders get wiped out because I've seen them get wiped out not because they are bad at knowing what is happening in the markets or there, but they get wiped out because they are chasing and forcing trades. Now I see some traders as well. They can't take a loss without trying to revenge trade it. And this is because their psychology is weak. Their risk management is not even it's nothing to write home. Hello guys.
Yeah, we can hear you, boss.
I can hear you.
All right. So in all of this, what I'm trying to say is the market doesn't care about your feelings. The market doesn't owe you a win. It doesn't care how long you've been studying the market. The market only rewards your discipline. And that's why I'm going to dive into this right now, because until you fix your mindset and learn how to manage risks like a pro, your strategy would never save you. That's just it. Because psychology is like let's say you are driving a car now. Your psychology is the driver. Your risk management is like your seatbelt. And if anyone gets broken, it's not a matter of if you would crash, it's a matter of when. But the thing about this psychology thing is once you shift your thinking, once you slow down, protect your capital, and trust your edge, your entire game changes. Because then you will stop gambling, you will stop chasing the market, you would stop trying to control it, and what you will now start doing is you will just flow with the market. So now I believe everyone here right now, every single person here in this call or anyone that would listen to this in the nearest future is here for the same dream. And that is financial freedom through the forex market. But here is the hard truth, because 95% of retail traders lose money. they lose money not because they don't know how to read charts or how to identify support and resistance, or but they lose because of their own psychology and risk management. So let me just dive into what has been uploaded in the chat box here. The brutal reality check. So I'll start by something that might sting you a bit, but that's just the truth. None of us is special. You are not special. I am not too. Your gut feeling is not magical. Your ability to read the market is not it's basically nothing. So the market doesn't care about your bills, your dreams. The market doesn't care if you are, maybe you want to pay your rent the next week. You go into the market today and try to use your rent money to pay to trade so you can double it and pay up your rent. The market doesn't care about all of that. Every trader who has ever blown their capital, and that includes most of us, me, you, and some other people too, they've all fallen victim of the same psychological trap. Trying to revenge trade, having to move their stop loss even when they know they should not move it. So the market isn't your friend. It's not your. The market is just indifferent, and it's going to expose your psychology and risk management. So let me talk about risk management, but I will still, of course, we're still talking about both psychology and risk management. So before you worry about making money in this forex space, you need to master not losing money. Risk management isn't the boring part of forex, but it is the boring part of forex to some people, because some people just want to get on a trade without stop loss because they feel the market is watching them. I've seen some of all these short reels about is whenever you put your stop loss, then the market sees it and goes for it or thereabouts. Risk management is literally the only part that matters in forex trading and psychology, because without your risk management, even the best of strategies in this world would eventually blow your account. So here is the mathematical reality. Yeah, if you lose 50% of your account, you need to make 100% return just to break even. And these are not just numbers. This represents years of perfect trading, and you will just blow it up in 2 days or 1 week of not trading with the proper risk management or psychology. I've always had this 2% rule or 1% rule. Never risk 2% of your account. Never risk more than 2% of your account on a single trade. I don't care if you're absolutely certain about a setup. I don't care if you are down for the month and you need to catch up. I don't like, the market doesn't even care. Let me not say I don't care. The market doesn't even care if your analysis is the perfect one. 2% maximum per trade is like the safest. Now, the difference between between being here now and being here next year is about how you properly trade, your psychology. because you can be wrong 20 you can be wrong on 20 trades, yeah, and still have a 67% of your account left with the same and proper risk management. Now there's something that happens to traders. I mean, that's happened to me before, because there's a psychology, just the psychology of losses, yeah. Every loss that you take as a trader is a tuition fee that is being paid to the market university, in the sense that the trader who never loses the trader who has not lost enough in the markets, yeah, cannot take enough risks, because they feel they won't really see risk management or psychology as a thing. They will just see it as, okay, as a number game. But me and you now that we've been in the game for a while now, and we lose this or we lose here before, just because I personally, I was self-taught, so I took a lot of losses before I started becoming profitable. Yeah. So when you take a loss, and you will take many, of course, ask yourself this: did I follow my rules? If yes, then the loss was the cost of doing business. If no, you have to work on your discipline, which is very, very key. Now, I'm going to move to the patient paradox. This is where a lot of traders get it wrong. This is where a lot of traders miss it. Even I still fall victim. One or two occasions, I still fall victim to this. Yeah, because we all know this, that trading is 90% written and 10% acting. But nowadays, new traders, they've reversed this ratio. They are constantly in and out of their positions, forcing setup and over trading. They mistake activity for progress, because they can't just sit on their hands and do nothing. They feel they are not being productive, so they want to always be active. They want to take this setup. They want to take this buy. They want to take that sell. They want to do this. They want to do that, bro. Because the best opportunities are rare, and your job is not to make money every day. Your job is to be ready when the high probability setup comes to play. Some days the best trade is no trade, even some weeks. Now, patience isn't passive, yeah. It's actively waiting. It's actively choosing to wait for your edge. It's having the discipline to watch perfect setup form without you jumping in, because they didn't meet your criteria, and that is the hardest skill in trading and the most profitable skill to learn in trading, because it's not an easy thing to watch the market and it's giving this bullish sign and you're just sitting on your hand because you are looking for one more confirmation. So now you need to build your trading identity. Think about the long game, because you are not a gambler. Don't try to become a gambler. I've seen people, I'm not better than them, of course, but it's just not me. That's not something I'm going to do. I see people just tap into this their on their MT5, you just keep tapping, buying, and all that. You can have 100 lots, multiple positions in one single. I'm like, well, that's them, yeah. But that's you trying to gamble the market. And when they won't even check the market structure properly or know what they're doing, they just want to buy. They just see a bullish candle, they're buying. They see a bearish candle, they're selling, and they're going in hard. So you're not a gambler. You are not a fortune teller as well. You are a business person managing risks in exchange for profits. Just see this as a company. Your trading plan is your business plan. Your risk management rule is your handbook. And your trading journal is your accounting department. Of course, you need to journal your trade, and that is something most of us don't do. Most of us don't do this at all. When you treat these things with seriousness, you will see that things will begin to change for you. Because if you don't take this seriously, the market will teach you, and it will teach you in a very expensive way. So in forex trading, it's always good to think about the long game. Forex trading is not a sprint. It's not even a marathon. I'll say that. To me, it's a career. I don't want to put anything on anyone, yeah? To me, it's a career. The trader who lasts decades, in years, they think in terms of years. They don't think of, okay, I lost today, I won the next day, blah blah. No. Now you're coming into the forex space, yeah. Your first goal of the year shouldn't be getting rich. It should be what you should focus on your first year is not losing money while you learn. What you should focus on your second year is refining your edge. And getting rich comes later, after you've proven to yourself over and over and over that you can survive in this forex space. Of course, this boot camp over the course of these 7 days will teach you strategies and the techniques and tools, but the one thing it cannot give you is discipline. It can't give you patience. It can't give you the mental toughness you need to follow your rules, because everything in your head is screaming at you to break them every single day. That's on you. Every single day, for as long as you trade, you are faced with the choice between discipline and impulse, between process and emotions, between the trader you want to be and the human you are. Because you want to become a profitable trader, you want to follow your rule, but you are still human. You will still see trade close to your stop loss. You are going to be scared. Okay, it's going to hit this. You will just close the trade. That is you being a human being. Now, the profitable traders make the right choices more often than the unprofitable ones. Not because they are smarter or better than the rest, but because they've trained themselves to act in long term. And that's just it. So I'm going to there are 4 pillars of trading psychology. There are 4 pillars of trading psychology. Number 1 is emotional regulation. Now, your emotions are informations, not instructions. Fear tells you about uncertainty. Greed tells you about opportunity. And anger tells you about frustration. But none of these emotions should make trading decisions for you. You shouldn't trade based on fear, greed, or anger. When you feel greed, when you feel fear, you pause and check your risk management. When you feel greed, you review your position size. And when you feel anger, I mean, why would you even want to trade when you are in a bad mood? Because that's when you would start to revenge trade and all that. That's just it. Your emotions are informations, not instructions. Fear tells you about uncertainty. Greed tells you about opportunity. And anger tells you about frustration. But none of this should make trading decisions for you. Because you can't fight your emotions. What you can do is redirect them. When you feel fear, you pause and check your risk management. When you feel greed, you review your position size. You can't be trading but don't even let greed kick in. When you feel that way, just check your position size. When you feel anger, you just step away from the charts. That's just it. So here is a practical exercise that you can implement from today, or I would really advise you to. Before you take a trade, rate your emotional states from 1 to 10. If you are above 7% in any direction, be it fear, frustration, excitement, or overconfidence, don't trade. Just the market will still be there tomorrow, but your account might not be there if you trade emotionally. So that's number 1 pillar of trading psychology. Number 2 is problematic thinking. Now, most traders think in probabilities. There's no such thing as a shorting in forex, because your job isn't to be right. Your job is to make money. They take losses and think they've done something wrong, but that's just the course of business. That's if you follow your rule and everything and you still take losses, that is just the course of business. And they take a win and think they've done something right. That is backward thinking. Because most traders, they want to get rich quick. So they take massive risks. They want to be right immediately. So they don't give their trades time to work. They are not patient enough to wait for the trade to really deliver the way it should. I've said this before as well. Your goal for the first year should be capital preservation while you learn. Your goal for the second year should be modest, constant results while you refine your edge. And getting rich should come after you've proven to yourself over and over and over again that you can survive in this forex space. Stage 2, reality check. The market changes. Your lucky streaks end. Your losses start to mount up. Then the trader refuse to accept that they were just lucky and start blaming the market, that the market is after them, the market is doing this to them, blah, blah, blah. But that's not the market doing shit to you. Stage 3, the desperation phase. The trader tries to get even by taking bigger risks, move stops to avoid losses. They start adding positions or start trying to revenge trade. Then the final stage is stage 4, they blow up. 1 or 2 massive loss wipes out months of small gains. The account is either destroyed, then the trader either quits or deposits more money and repeats the cycle all over again. Now, this happens to 95% of traders. It happens to 95% of traders. The only way to avoid it, is never enter stage 1 with the wrong mindset. And the stage 1 with wrong mindset is being lucky because you just entered the market and you're winning easily. That is the honeymoon phase. You feel the market is like that. Anyone can just go in and make money. But that's the wrong mentality. You need to understand that early wins are often just luck, and focus on building sustainable profits or habits from day one. So I'm going to dive into risk management for a while. I'm going to try and dive into risk management right now. I think I've said this before. If you risk 10%, if the risks of ruin formula, if you risk 10% per trade, if you risk 10% per trade on a 50% win rate, I think you guys should jot this down. If you risk 10% per trade on a 50% win rate, you have a 100% chance of losing everything. If you risk 5% per trade with a 50% win rate, you have a 94% chance of losing everything. But if you risk 2% per trade on that same 50% win rate, you have a 14% chance of losing everything. Now, the lower the risks, the more power you have in the market. That's why I made mention of something for that. Do not risk more than 2% on a particular trade. Even if you feel okay, this is the since you are extremely sure you want to go in with 50% or 10% of your account, you don't do that. These are mathematical calculations that I have personally done. So your position size isn't determined by your confidence level. It's determined by your probability level. So now there's psychology of winning and losing streaks. So just key points that I wrote down. Psychology of winning and losing streaks. Every trader, because I have experienced both of them before, every trader will experience both winning and losing streaks. How you handle these streaks determine your long-term success. That's just the truth. How you handle these streaks will determine your long-term, if you're going to be in the market for long or you will just quit along the way. So during your winning streaks, number one thing you shouldn't do, don't increase your position size just because you are winning. Number two, don't start taking lower quality setups because you are winning. Then you feel any little bullish candle, you feel, oh, you've been on a winning streak. Now you can tell the market what to do. It's not going to work out for you. Number three, don't assume you figured out the market. That's literally what I just said right now. Do not assume you figured out the market. Stay humble and stick to your process. Now, during your losing streak, 4 points also, don't decrease your position size because you are losing. Don't decrease your position size unless drawdown rules require it. Don't start forcing trades just to get even. Most traders do that this day. They do that this day, and without discipline, I will still be doing a bob. I'm happy I've gotten to the stage whereby I just take a loss and I'm cool with it. Before I enter a trade, I am okay with the outcome, either win or lose. I am okay with the outcome. Streaks are normal. You can imagine if you're flipping a coin 1,000 times, you will get a string of 7 to 8 heads or tail in a row. This doesn't mean the coin is broken. It means you are dealing in random. These things happen in every system, in every way. These things happen. They are winning streaks, they are losing streaks. Before you go into forex trading, these are the things you need to know, to accept, not just knowing them. You need to know them and accept them. Now I'm going to dive into the energy management system. Trading is mentally exhausting. Trading is mentally exhausting. You are making decisions under uncertainty, managing emotions, and dealing with financial pressure. Because you can't your rent can be coming up, or you need to pay some bills and you are trading. Don't go into trading with the mindset of, okay, you want to make your rent money right now, or you want to make the money, you have to pay some bills, so you have to make this money right now. No, don't go into the markets with that mindset. You need to manage your mental energy, and you need to know your peak performance hour. Identify when you trade best. Are you sharp in the morning? Are you better after lunch? Don't force trades during your low period where you're not really feeling like trading. Don't try to trade. Don't do that. Know your limits, and you have to have a recovery protocol. After a big loss, or you've had an emotional day, take time to recover. Go for a walk. Do some exercise. Do something that is completely unrelated to trading. Your brain needs to reset. I do this a lot. Me personally, as a trader, I don't like to take 2 losses on a row. It has never been okay with me, and I don't think it will be okay, but it happens sometimes. So whenever that happens to me, I just go off for a while. I just leave the charts. I do something else. I just spend time more with my family. I just go out. I love to play video games. I'll start playing games and all that. I just do something that is completely unrelated to forex trading. Then my brain has to reset. Then when I open the chart again, I see something clean. I see something different. Then I start to trade again. Now, you need to build your trading identity. You need to know who you are as a person and as a forex trader. You need to know who you are as a trader before you can be successful. Are you a scalper who likes to scalps for who likes quick profits, or you are a swing trader who wants to hold your position for days, or a position trader that can hold for weeks or months? Your personality determines your trading style, not the other way around. If you are impatient, then you should try to be a position trader. If you are impatient, don't try to be a position trader, because you have to wait for weeks and you don't have the patience for that. So you need to work with your nature, who you are personally, not against it. I see most people who are not patient at all in trading, so they can't even hold a trade for 15 minutes. They want to start seeing profits. If the trade just tries to reverse close to their stop loss, it's not even up to 50% of their stop loss set, they close the trade. You can't trade with that mindset. Now there's the trading business plan. I always treat my trading as business. Always. Because when you see it's like, okay, this is your source of income, this is what you do. I do other things outside trading as well, but trading is like my main source of living. So it's my business. Treat your trading like a business, because it will change your life. It has changed the lives of a lot of people that I personally know. What are your goals? Your risk tolerance? What's your edge? How will you measure success? Write it down. review it regularly, update it as you go. Have a board whereby, because you can just have it in your head, okay, if I see this candle above this one, if I see liquidity, if I see this stuff, if happy this day, if I'm happy this day, then I'm going to trade blah blah. Just you can't keep all of these things in your head. You have to write them down so you can see them every day and update them as you grow. Now, the compound power of small edges. You don't need to be right 80% of the time to make money. You don't need to be right 80% of the time to make money. You just need a small edge and a discipline to execute them well. Now, if you are right 52% of the time with a risk to reward ratio of 1:1, you are profitable. I've seen traders who trade 1:1 and they're profitable. It's crazy. Even thinking about it, it's very crazy. Now, if you're right 45% of the time with a risk reward of 1:2, you are profitable. If you are right 40% of the time, 40% of the time with a risk reward ratio of 1:3, you are profitable. It's really amazing how I see people fail in forex trading when there's a simple rule of 1:3. I think I made calculations one time. If you take a trade, if you take 10 trades with a risk reward ratio of 1:3, and you lose 6 times and you win 4 times, you are still you are profitable. You are still 40% profitable. You are profitable. So with the proper risk management and psychology, this risk reward ratio alone would keep you in this game for a very long time. The key is knowing your edge and sticking to it. Most traders abandon their edge after a few losses, thinking it's broken. I can take I've always taken trades before, the same market structure that I need to see before I take a particular trade, and I've been winning it. It has been going in the direction that it's supposed to. Then I'll not take a few losses with that same market condition, and because I lose maybe 1 or 2 trades or 3 trades, and I'll not be like, okay, this is it's not gonna work. No, don't be a prostitute. Don't jump from one strategy to the other, because okay, this doesn't work, you have to jump to this one. This doesn't work, you have to jump to this one. You have to do trend line, ICT, SMC, blah blah blah. There's a lot of big grammar going on right now in the forex trade, in this forex space about trading style, trading this. I hear some of them some days. I'm like, what's this again? I don't know what this is. Most of all these that big words in trading right now. This one say dirty soup. This one say there's a lot. I don't know them. Literally, I don't know them. But I am still profitable because I'm sticking to what has been making me money for a very long time. I don't need to change it, and I'm not going to change it. If everything aligns in my favor, okay, this is there. What I'm looking out for is there. I love this structure. I love this pullback. I love this liquidity. Blah blah blah. And I take a trade, and it doesn't go my way. I hit my stop loss. That is the cost of doing business. I am okay with the loss. It's not going to affect me. It's not going to change my mood. I see some traders, or maybe they're just making content these days. They will post, they will trying to, if the market doesn't go their way, I'll see the guy smashing his TV or doing this or doing that. Don't be that kind of person. Know your edge. The key is knowing your edge and sticking to it. You don't have to abandon your edge after you lost a few trades. It was that same edge, it was that same strategy that has kept you going, that made you money before. So why do you think it's not going to make you money again? All you have to do is refine it. Okay, why didn't it work this time? Why did it work before? Review your trades. I do this a lot. I study every single time. I study every single time. I still watch videos. I study a lot. Weekends are like my moving. Some weekdays that I don't trade, I'm studying. Or some weekdays that I don't trade, I just want to be completely off the charts to reset my brain. Either I'm reading a book or I'm playing video games. So here is what's going to happen when you leave this call. Yeah. Or not just this call. After this 7-day boot camp, you're obviously going to be extremely happy that okay, you've learned something from JayFx and some other people. Eli has dropped some massive stock trading strategy yesterday. Some other top traders here will still drop some insights. Pro Trade will still come and give you guys some nuggets and all that. Then you will go and be excited. You are going to want to trade immediately. You are going to think you can skip the boring parts and get to the money making points. Don't do that. The market is going to test everything we've talked about today and what you're going to learn during this 7 days boot camp. It's going to tempt you with easy setups and take your losses. It's going to offer you huge profits if you just risk a little more than usual. It's going to make you feel it's going to make you start feeling like rules are not meant for you. They are meant for other people. You are the king of the market. That's just the test. And that's when you find out if you are really ready to join the 5% who are profitable from forex trading. Because a lot of people want to go into trading. A lot of people want to go into trading. But they are always losing. Of course, the market is a place you are making money because people are losing. That's just the hard truth. You are making money because some people are losing. The market is not just a tree that's hanging somewhere, then you just go there and start plucking money. No. We are making money because some people are losing. Some people just want to test the waters, dropping millions into the account. They want to trade this, they want to know this, they want to see how it works. They lose money, you are taking money from them. So you have to have your trading commandments, yeah? Now let me leave you with this. Let me leave you with a non-negotiable. Because the commandments that will keep you in the game longer than people who don't use risk management or their psychology is poor. I think I have about 10 listed. I'm going to say them pretty fast because time is already going. So, number one is never risk more than 2% on a single trade. This is not a suggestion. It's your life bank. It's your account. It's what makes you stay in the game longer. Let's say your account now can take only maybe 4 trades or 5 trades, and you go in and just cut it short to 2 trades, and the third setup, you now see that this third setup now played out, but you've cut your lifeline short by risking more than what you're supposed to risk on a single trade. Number 2, this number 2, a lot of people a lot of people are still not using stop loss. Always use stop loss. Stop hoping that when I buy now, the market will go up. Hope is not a strategy. You don't hope in the forex markets. It will kick you out. It will flog you very, very well. You don't hope. Always use stop loss. It's not making you less of a trader. It means you are a smart trader. But some people don't want to use stop loss. When they put stop loss, the market is seeing it and is going to hunt it. Or their broker is seeing it and it is going to hunt it. Keep a trading journal. What gets measured gets managed. Once you join your trade, you will know what you did wrong and how to adjust it. Number 4, trade your plan. Plan your trade. Number 5, take breaks after emotional trades. Your brain needs to reset. I think I said a lot of things about this particular one. Number 6, focus on process, not profits. The money follows the method. Number 7, respect the market. It's bigger than you and it doesn't care about your opinion. All you need to do is flow with the market. Don't try to control the market. Don't try to because you want to buy it, so the market has to buy. The market doesn't give a excuse my language. The market doesn't care about you. Respect the market. Number 8, never revenge trade. The market doesn't owe you anything. It will take your losses today. It will take it tomorrow. It will take it for the next 8 months. It will take it for the next 2 years. If you don't have the right system, or if your psychology is broken, or your risk management plan is broken, the market doesn't owe you anything. Number 9, quality over quantity. It's better to make 10 good trades over 100 mediocre ones. Sometimes I just drop 1 or 2 setup for the week and I'm okay. Sometimes I'm in one position for the week and I'm okay. I don't have to trade every single day. And number 10, stay humble. The moment you think you figured it out is the moment you are in danger. Me personally, I don't think or feel I figured out the market. The market has been in existence for like a very long time, since before most of us was even born safe. So you want to feel you figured out a system that has been working years, that is even older than your father. Stay humble. So that's basically it. Trading this isn't about learning to trade. It is about learning to think differently, to act differently, to be different. The person who walks into the markets with discipline, patience, and proper risk management is not the same person who walks in with hopes, dreams, and gambling instincts. You have the opportunity to transform not just your trading, but your entire approach to decision making under uncertainty. The skills you develop here, emotional regulation, problematic thinking, risk management, long-term perspective, this will serve you in every area of your life. Forex is basically a way of life. If you were really deep into forex trading, you will know. But transformation requires commitment. You just have to be commitment. Commitment to do what's right, even when it feels wrong. Commitment to follow your rules, even when breaking them seems profitable for a while. Commitment to the long game, even when the short game is tempting. So, are you ready to do what 95% of traders refuse to do?